guys, it's Elisa Murphy with French Quarter Realty, and I have some news. I just got off the phone with Wells Fargo to ask them specifically about mortgage suspensions and what that may mean. So last night I was posting a lot of articles on my stories about the bill in the Senate being passed for COVID-19 and how that's offering various forms of relief. But what does it mean for you, and what does it mean for your mortgage? So you know, hold times are well over an hour right now with all the major banks. I talked to Wells Fargo because they are one of the big five that are offering relief in the form of mortgage suspension, and also because they are my mortgage company. So I wanted to see what I could get on my own mortgage. So let's look at this. So what they are offering today, and I want to preface this by saying that this is directly from Wells Fargo. I am not providing advice. Please see a financial advisor for that. But I can relay what I was told on my call. And I also want to impress that this is what's happening today, which is the 26th of March. And as COVID-19 evolves and as relief forms evolves, this may be obsolete or it may evolve. So this is what's current as of March 26, 2020. The first thing is Wells Fargo, and I'm told their competitors, are offering up to 3 months of mortgage suspension. Two important things there. One, it's 3 months. It's not 90 days. It is 3 full months starting today. Second is that it is payment suspension. It is not payment forgiveness. It is not hitting pause on your mortgage. It is just suspending you having to pay payments. So what does that mean? That means that if you call them, and you have to call them or go online and request this, it is not automatic. If you confirm with them that you would wish to receive mortgage suspension, you can pay your mortgage as you currently do in full and have the suspension. You can pay it in part, whatever you can, during the window of suspension, and you can pay nothing during the window of suspension. Now, as you might expect, there are some things to be cautious of. This is not just, hey guys, the banks have forgiven us. There are a couple of things to look out for. And I will get to those before the end of this very short video. The second thing where you will benefit is that there will be no late fees associated. So when you usually pay your mortgage, if you were to pay it late, there are penalties in the form of fees. Those fees are going to be waived for the next 3 months. There may be other penalties for you. Please keep listening. You don't have to pay late fees. You also will not have any negative credit reporting. The banks will not hurt your credit if you choose to suspend and pay none of your mortgage for the next 3 months or pay some of your mortgage. You won't have late fees, and you will not have any negative credit reporting on your account, on your person. I'm going to get to a couple potential negatives in a second, but before I do, you should be asking the question, and I did, what happens next? When do I have to pay those payments? You have to pay them currently after the 3 months. So you will have if you choose to pay none of your mortgage for 3 months, you will owe 3 months of your mortgage on the last day of that loan, or as soon as that suspension is over. That's important because while you might be putting off a current hardship or creating a current opportunity for yourself by not having to pay your mortgage every month, you still owe that money, and you owe that money at the end of your suspension. That said, based on your personal current situation, the bank will work with you. If you call and get your mortgage suspended, you are going to receive some information in the mail that is pertinent to you. This may mean that your payments are due at the end of the suspension. That's going to be a lot of people. 2, you may have a payment plan. So for the next several months, you may pay 1.5 times your mortgage, 1.25 times your mortgage. I don't have those specifics, because they are going to be different based on the individual. Look for that information in the mail. Go with it. Last but not least, I told you guys to be careful about this. One, be careful because this is not putting pause on your mortgage. I'll say that again. You are not putting pause on your mortgage. You still owe that money, and you owe it at the end of the suspension, which is currently at the end of that 3-month window. So be careful about that. Budget accordingly if you choose to do this. The second thing is you can continue to pay some of your mortgage. Say you want to cut your mortgage in half. Great. Now you only owe the delta or the difference. You owe the sum of those half payments at the end of 3 months. So think about how you want to do that meets your own needs and current situation. I mentioned that there are no late penalties in the form of fees. There are no late fees, but this is the catch that could get many of you. If you are currently paying private mortgage insurance, in most instances, that means that you put less than 20% down on your loan. You are federally required to pay private mortgage assistance until your loan to value ratio is 80%. What does that mean? That means that if I put 10% down on my $100,000 house and my loan is 90%, I've got to wait until the value of that loan, that amount that the bank has loaned to me, gets to an 80-20 ratio. So 20% paid off, 80% of the loan remaining. This isn't total payments though, because your payments include interest. So this is just your principal. So if you are in a situation where you are paying PMI or private mortgage insurance and you choose to suspend your mortgage and, keyword, and you do not make full payments, those will count negatively against paying off your private mortgage insurance. They will be counted as late payments, and it will compromise your ability to get that insurance removed when you hit the 80% loan to value ratio. I'm going to repeat that. If you choose to suspend your mortgage and you do not make payments in full during that suspension time, you may have to continue paying private mortgage insurance for much longer after you have reached all of the parameters for paying down your loan enough to get rid of that private mortgage insurance or PMI. It's a lot of money. It can be $50 or more per $100,000 of your house that you are paying as a form of, some may say, a tax or a penalty tax because of the past mortgage economic crisis. So if you need to suspend your mortgage, call your bank. You can get it done. Expect to spend at least an hour on hold today to get through. You can suspend it for 3 months. During that time, you can make payments in full, payments in part, or no payments. At the end of that suspension, you will owe them all of the money, but you can work with them based on your personal current set of circumstances on a payment plan. If you choose to not pay in full, make sure you call them and are approved for suspension. They are approving everyone, but it has to be done. You have to set it up with them. You can't just stop paying payments. Also know that if you pay less than your full mortgage, you will not have negative credit reporting. You will not have late fees, but you may have to continue paying private mortgage insurance far longer than you had planned. And last but not least, this situation is continuing to evolve. This is the bank's response to the Senate passing the COVID-19 relief efforts. The House of Representatives has not ratified this yet. As COVID-19 evolves, as the situation evolves, as the responses, negative or positively in the form of relief to our current economic situation goes with COVID-19, these circumstances could change. So if you want the suspension, call now, plan to wait on hold, know what you're accepting, ask questions, and get it done early. This is Elisa Murphy with French Quarter Realty. I hope this has been helpful in helping you understand mortgage relief during COVID-19, March 26, 2020.